Let's put my not face up here. There we go. So right now I'm only streaming to what, 3 places? Yeah, we're streaming to 3 places, but in the future there's 45. Oh, I forgot I gotta mute that. I'm gonna get started in a couple minutes once I finish the rest of this audio setup. What's up? Cool. All right. So I know some of you guys are what? If you're in Telegram, I don't think you can comment, but I can see. Well, I'll see all the typing from or the text from x.com. Better make sure I don't say the T word. Okay. Yeah. So let's get just like a quick check, like a mic check, audio check. I just want to make sure you guys can hear me over there because I'm not doing spaces currently, but in the future you'll also have the option for spaces. And Twitter does this weird compression with the audio. I've noticed that. I also want to see what the delay is from the Twitter stream to over here. Just curious. Because I have like an admin panel where I can see all comments. It's good. Sweet. Unlike a certain platform that starts with the letter Z, we're not going to talk about that. Cool. And if you have, I guess I can go on Telegram myself and see, but I'm logged into that, so I don't want to see it. But oh, I see that. I can actually see it works through Telegram as well. That's fire. You know how long I've been waiting to. They have that feature where you can stream directly there, but now I'm like everywhere at once. This is pretty fire. But that's great. It's got the notification there and everything. Yeah, rhymes with doom for a reason. Absolutely. Okay. So I have you on that page. We're not really, we don't need to be on this one, but this is ready to go. I'm just telling you that right now. This is ready. So just understand that although I'm not going to use it currently on screen for IP reasons, this is all ready. It was pretty exciting. And I told you that the moment that became true, I would get back to doing what I'm best at, or not what I'm best at, but you know what I mean. I would get back to what people have been asking me to do for a long time. So let's get started. If you like this platform, you might not be seeing me use it very for very long, because we will be using versus the market and the terminal within that. But all right, so let's just make it quick. In terms of objectives, right? Here's what we're looking to accomplish. Oh, and thank you, Paul. I see that. Slight delay. Telegram is a little bit before X, but not a lot. Nice. Okay, so the goal here is to just go into the week with clearer minds, some better ideas, and maybe, take some of the stress off of whatever comes with the week. You're going to hear constant politics. Obviously, you're going to hear, you're going to see a lot of tweets from, various traders and all these opinions that people have, and all that stuff is fine, but you got to find a balance. If you don't have, excuse me, if you don't have a balance, it can become overwhelming. You know what happens, right? A lot of times, both things are bad. Either you'll force the activity, right? Or you will back away from it, which is a valid response, but you might be robbing yourself. So the goal here is just to, again, kind of get familiar and get back into the habit of preparing early as much as you can. Some ground rules here for people who may have forgotten, or if it's been a little while, right? The way I operate in my thought process is, I personally don't believe in taking or having a very strong quote unquote thesis or anything like that. I don't believe that trade setups work inherently. Quants and larger institutions don't even use technical analysis. I've said many times that TA is BS, but there are some advantages for it for retail traders, and there are a lot of tools out there. There's a lot to get confused about. I'm looking to cut through the noise, number one, and to help start solidifying a process that works for you, to dispel some of the inconsistencies. And of course, the thing that I think a lot of people miss on a day-to-day basis as a trader is everything that works for me, or the things that work for me or someone else, may not work for you. So there is some nuance there, some reading between the lines. Okay. But I'm not going to, you guys know me by now. And if you're listening or tuning in, you haven't heard me in a while, or you've never heard me speak, you can probably tell from my tweets, I'm no nonsense, no BS, get straight to the point. So, all right. We're going to start with SPY. In the future, maybe we'll do XPX. There are some differences there. There's some nuance there. In the chat, though, you can, if you're on Telegram and you want to type in the chat, you can either go to X, or you can type in the group chat, I guess. But I'm down to see requests or charts that either you struggle with from last week and you are in the middle of a trade, or you're looking to potentially trade. If you want to get my thoughts, they might be pretty fast, like pretty, short. But for me, I'm going to start with SPY. And we know the reason why. This is also going to be like a general market idea, market ideology and approach. So the first thing is, this is kind of like free education, though, at this point. I don't know how often I'll do this, because everything will pretty much be within the community. But for starters, you got to create the picture properly. I think most people miss that. And it's not until, actually, I've never heard this anywhere else, but you need to frame the information a certain way. So when you see people just throw whatever on the chart and, they're measuring the volume or whatever from wherever, it's a bad idea. Okay. Because number one, not only are we teetering on this fine line of what's relevant and what isn't, right? We have to make some decisions about what is most relevant and do whatever we can to extract only the most relevant information. So if you had to write anything down, that's what I would write down as a goal. Only the most relevant information. You're gonna hear me say that so often. If you're going through the data, I mean, you're gonna see a lot of streams from me, a lot of recorded streams. There's a lot of content on the way, but only the most relevant. It's so much better to keep things simple, and the only way you can make this noisy world simpler is to proactively and consciously reduce what's being thrown at you. So We'll start with, I'm actually going to write these down so I can keep track of what the notes are. And so these, when I refer back to them, I might have some additional thoughts on it. So just reducing the noise, or you can say that however I said at the beginning. I like reducing noise and extracting only the most relevant information. Relevant here, of course, is something that can be subjective, but let's talk about a day trader. This is how I'm approaching it, right? You got to know what kind of trader you are. The way a swing trader might look at this is different than how I might look at it, right? Same thing with a momentum trader. So for me, I'm looking at intraday. I know primarily I might be trading options, or whether or not I'm trading single direction, or I'm writing options, or I have multiple, I guess you could say, strategies that I might employ. My general rule of thumb is I do not typically pay attention to volume that is either outside of that particular month or over a month old. I'm not saying that that's a rule, but that's just me. Additionally, just use your eyes. As simple as that sounds, literally go to the daily chart first, which is what I do. Go to the daily chart first. Why? Just because I said so. I go to the daily chart, and now I'm going to use my eyes, okay? Try to understand the story of what's happening within the market. Anyone who doesn't do this first, God bless them. But this has led to me being able to survive for a very long time doing this, okay? And teaching and sharing with a lot of people for a long time. And you've been around, you've witnessed it. I've traded all market conditions over the last 4 years, and I've been trading a lot longer than that. But you have been a witness to that. And this is something I always do, even if it's just a peek. So obviously, we're not going to call this support. I don't really care about this at all. Only thing I'm doing is I'm putting it into context. August was quite a ways away. So let's start from here. I think this is a pretty significant shift within, what we see. It's outside of a month, right? But barely. So I'm going to choose this over going to September 20th, right? That's nuance. That might not seem like a big deal, but to me, actually, let's use this one. One of these two. It doesn't matter. If I move the volume itself and I start to notice there's a huge discrepancy over here, maybe I'll think more about it. But this time, not so much. I'll use this because I know that this day obviously it started off as a down day, right? Open, low, high, close on that candle. All right, let's get moving to the next part of this. So for me, this doesn't tell me much. This just tells me price sat here for a while, right? That's why that series of volume is here. So it's not very helpful, but that's fine. I'm checking, make sure there's no major pivots overhead that I need to watch out for, nothing like that. We're pretty much fine. We're gonna go into 65-minute chart. I use a 65 next. You could use the 4 hours. I mean, some people are successful with that, but you don't need to look at every time frame, or every major time frame on the way down. 4-hour chart is actually pretty cool. So let's do it. Again, you see how often I will change like my strategy or the series of steps that I do, because I know how all of the steps, if you want to call them that, I know how everything I do impacts and is influenced by everything else. You don't have to do that. You can follow a step-by-step process, but I'm just explaining why I might shift. And I don't want you to think that there are steps that I'm skipping and I have a reasoning for it. It's not that. I'm just improvising. All right. So the first thing I'm actually going to do is, I don't like the shade of this gray back here, but I had this last week, this area. I'm going to get rid of it because it's just noise at that point. You'll notice I have after hours session on, and we're going to put it back. We're going to put that back. The next thing I'm going to do is explain. I'm using what's called a logarithmic chart. I don't want to get into explaining it right now, but the best way and the short example that I can give you, or the short definition for it or use case, is this allows me to see the actual change measured in candle size as opposed to relative change. So if there is a significant drop in dollar amounts, I'm actually getting a chance to see that, and you'll notice that they're not nailed down to like 5 cents or 10 cents, per whatever this measurement is, right? It's showing me all the dollar amounts. So if I want to see how impactful a candle was, it'll show me that. And there's other reasons for it, but this is how I prefer to do it. It's not as convenient as if I had taken this off, and things would probably snap together a little bit easier. But I like to be very specific. You do not have to do that. But if you're wondering why your chart might look different than mine, there you go. So 4-hour chart. Have the after hour session on, very important. Notice I'm not paying attention to the volume anymore, at least not right now, because what's most important to me at this point is identifying what the pivots are. So I see obviously the all-time high was here in an after hour session. Don't really care too much about that. This, you don't even really need to mark as far as I'm concerned. Most of the time I would leave this out, honestly. But today, I will mark it. And because I don't want to go through this, I don't want to mess things up or, click something later on and not pay attention to the mix up there. I don't want to put too much emphasis on that mix up. I'm going to lock it in place. So it's sitting there. I can't tamper with it later. It might sound like a lot, but these little things make all the difference. They allow me to go back in when I'm ready to take a trade and I need to zero in, I need to dial in. And I don't have I eliminate almost all possibility of mistakes. It's the same reason I do the simple things over and over again, because I have no errors, no holes in my game, so to speak, when it comes to that stuff. So that's that one. I'm gonna take another one and I'm going to mark just these areas that are in what I deem to be important, right? 2 pivots here. So there's one here that's slightly higher. I'm going to go with the one that's higher. Again, you might ask, what does this have to do with anything, or what's the importance? What's the significance? I could teach several lessons on that, but more than anything, I just want to make sure that I'm aware on a larger scale. If I start looking at something intraday, even later down the week, let's say price breaks out way up here, right? And there's a pullback somewhere in this range. I want to make sure that I don't forget, or that I'm aware that this may have been a significant spot at some point. This is what we call the zoom out and look left. This just makes sure that I don't have to zoom out and look left every time, right? I'm watching my own back ahead of time. All right, what's next? So these prices over here, I mean, again, this is all-time highs. I don't really care too much about it. I just like marking these two. And you might recall from a while back, and I do mean like 2.5 years. Go back to some videos from like 2-3 years ago that I made. Some streams on pivot points, actually. I talked about knowing what the candle movement is like. So the cycle of a candle, open, high, low, close, right? That's what you'll get on a red candle. And of course, you'll get the open, low, high, close on a green candle. That is called the life cycle of a candle. So what might help me tell the story is, between these two, maybe it's not the high that's as important, but maybe if I can find some commonality or confluence between those closing prices across the board, that's pretty much where I want to aim for. Obviously, I mean, we can see it, but we can't get very specific here. So what I'm gonna do is I'm gonna go into that 65-minute chart now and see if I can identify it a little better. Got it. So let's pay attention to how this works, right? Let's say very loosely, prices breaking out. Okay, cool. Breaking out. Yep, got some rejections here, rejection here, rejection, whatever. We don't need to be too specific on whether it was a rejection or lack of orders above or whatever. Just price didn't go higher, okay? And we see that wick here. So this spot to me makes sense. We also see that in the pre-market session here. We also see that happen again somewhere in a few days after, or a couple of days after. So not at the same spot, not the exact price. That doesn't matter, but it's a range. Every candle's a little range, right? Short range. Same thing can be said around here. So what are we noticing? It's this area there are rejections happening in this area, or orders are having a tough time filling here. So I'm very comfortable, very confident with choosing this area. And what you can do is take one of these, or something along those lines, right? Like just a block, just so you remind yourself, this is a range I'm paying attention to. And then, adjust this however you feel like you need to. Some people might want to do this because there have been rejections here, and you should label your lines. Don't just leave lines all over the chart. Keep it clean. So I'll put this as, I hate using the word resistance because that's not what it is, but we're going to just use that for the sake of communication and using the same language. I know most people will refer to it as that. The more you hang around, Around here though, you're gonna stop using that phrase for the most part. All right, potential resistance. So now I know going into tomorrow into the rest of the week, this is an area I need to keep an eye on, I need to watch out for. Notice I haven't used the volume yet. I don't really care about that right now. 65-minute chart. Can we go a little bit further in? I'll do 30 minutes. This is not my favorite, but there you go. It's actually a little better. I like this. We're gonna lock this in place. Lock the figure. Bam, we're good. And make sure it shows on all time frames. Now we're good. I have a great area to look out for, and I'm gonna actually move this to the right hand side, top right. So now, no matter what I do on any time frame, I come in here, I know I'm gonna see that. That's gonna remind me what this area is. Okay. See how this potentially is more relevant than the one above it, even though that's the high. This nuance is a huge difference, because what it does is allow you to give yourself some what we call grace when price breaks out above a level you had marked. It gives you some context, and also may help you make some better decisions. So when price is volatile tomorrow, for instance, maybe price breaks out above here, right? And maybe you had a trade idea set up here, and you see it break out, and you say, "Ah, got to throw that trade idea in the trash." Well, maybe not, right? Because this would let you know, hey, there was a spot above where we've also tested this area, and sometimes when there's a new high, price breaks out above that and goes even further by a bit, that's when you start looking to make sure there are no other pivots that you're missing. So anyway, there you have it. What's next? 30-minute chart. Let's go into the 15, which is the one I use primarily. 15-minute charts and 5-minute charts together. Now I'm going to take a couple of, now it's time to use the volume, or it's almost time. So let's do a couple things. The first thing I'm gonna do is go to all of last week and see if I can frame this, just to see what happened. So let's see, it's the 20th, so let's go here to the 14th, or to the 11th for the start of the week. So we got 10, 11, 14. Okay, so 14's here. End of the week. 14's here, and we are ready to rock. Notice how I'm very particular about how much volume I'm measuring. This is called your anchor, right? You don't want to measure everything in sight. You want to look visually and then see what you can measure elsewhere. So I'm using all of last week as an anchor. Why? Because starting the week off, we have nothing to go on. So I got to use something. I'm going to use what makes sense visually, what makes sense mathematically. So all of last week. I can do one of two things. I can use this, or I can just take the additional day, because this is closer in range to that. Let's see what we get. Okay, one here, one here, one here. I'll move it over. Just measuring both. Don't be lazy. All right, we're good. We're good. This is good. This makes sense to me. So now we got the volume from last week. Okay, so that's what I'm basing this on now. Still no patterns, nothing else. You guys can realize that. So what we got here, no patterns, don't care about that, but I know a lot of volume traded here. Cool. I know a lot of volume traded here. Fantastic. This is a range, obviously, right? Price went from here, gapped up, came down, and is working its way back up, even though it kind of struggled. So this whole little area right here is something I need to watch out for. I noticed a pattern if I went into that 30-minute or 65-minute chart. I'm gonna, was it the 65-minute? Yeah, there's a couple ways I could look at that. Let's go back to that 30-minute chart first. Yeah, there you go. All right, so there's a few ways to look at this, obviously. But before you start drawing patterns, let's just try to make sense of it, right? What did price do? It took all damn day to go up barely. That's the best way to put it, right? It's a very simple way of putting it. Price seemed like it did not have the ability, or it did not want to break above what we have as our potential resistance and our previous resistance, which is actually, that's a great way to actually describe it. Let's put previous / potential resistance. So what can we draw from this? It won't be perfect, but I'm just curious if anybody, is anyone not rusty at this? This is easy. What could you draw here? Remember, it won't be perfect. Super simple stuff. Let's go to the 2 hour chart. 2 or the 4 hour. But I mean, all of these will be great, to be honest. Let's do 4 hour. Let's use this one actually, because the same thing happened between those 2 days. It's the same kind of pattern. All it is you're going to find these, depending on how you draw it, I'm going to call them ascending channels because they're not really wedges or triangles, but I just want to show you the idea here. The idea, once we go back and make sure we're grabbing volume from the correct places, which I got to go back and find that now. Let's do month to date and then bring this back on over to the week. There it is. Okay. So when measuring these, right? Yeah, we need to do the 2 hour chart. But I'll show you this here anyway for your own records. All I'm doing is just paying attention to how long it took to get from here to here, which compared to how price had been moving, this is relatively slow. And so much volume traded up here by comparison that, you know, it's easy to see this as, if we're just measuring this area, it's easy to see this as not nearly as much volume traded here. This is what has the makings, and not in my opinion, but I'm saying I can see the perspective of the short trade, right? The ability to look at this and say price has gotten rejected a bunch of times from up here and has traded less volume on the way there. But when it's gotten there, not only has there been more volume, but price has actually gotten rejected from there. So it would lend to the idea that there is not a positive direction, or that the headwinds above are very heavy. They're strong. The downside move is more favorable from here. All of those things, right? Those are things that you could say about this. So because of that, notice how I'm not committing to that idea. All I'm doing is just taking it and saying, all right, well, that's the first thing I'm thinking when I see that. Nothing wrong with having an idea or having a thought, but I need more information before I commit to that. So I'm gonna take these and I'm gonna do the same thing. Notice how on this 2 hour chart, it's similar, right? All same thing, but because it's gapped up, I'm willing to forego that idea. Okay, so here, notice I'm not putting too much emphasis on drawing the pattern. Once again, it is the idea. If you spend your time stressing about how you drew the lines, it's not your fault, but someone should have told you otherwise. All we're doing is capturing the idea. There you go. Anybody know what this is called? Don't be afraid to speak up, or I will call on you by name like it's 3rd grade, 2nd grade. I don't know what grade people got called on in class. My teachers were afraid to call on me because they knew I was going to answer and then ask some off-the-wall question to follow. Indeed, rising wedge, a bunch of different names for it. The pattern itself don't really matter, but it's just the idea, right? Price, for lack of a better phrase, just has struggled to make any real headway here. And if it meets similar rejections like this, there has been volume in the past or in the last week somewhere within this range. Now, we're not going to get into gap aversion and all that other stuff, but that would be my first idea. Going into the week, I know with SPY that price is sitting somewhere that it has had trouble with. This means, to me personally, I can tell you right now, if I'm trading at the open, I'm not trading to the upside. Like if I'm scalping trade, maybe, but I don't do that for the most part. But I'm going in apprehensive of trading to the upside, period. There you go. I already have created you can call it a bias if you want to, but everyone's biased in some way. But I have a very strong reasoning for not wanting to trade to the upside off rip. That doesn't mean I'll trade short. I have criteria for that, which we'll talk about next. But this is how I start off all of my, not just all of my trades, but when I'm thinking about something, looking at something, the goal is to minimize risk, which you probably want to write down in some way. I would jot down minimizing risk, but also what's the phrase I said a couple weeks ago? Maybe I didn't say it to you guys. I said it to someone within the group, in the community. And no, I think I typed this out. It was trading is about putting yourself in position to win. It's just getting in position to win. So it's odds, right? You won't win all of them, even if you have the same process every time, if you do everything quote unquote right. But there's no such thing as doing something right and or wrong, really. And if you don't know what I'm talking about, you can go read about the efficient market hypothesis. Basically, there should not be a way to profit from information that is freely available to everyone. But there are papers out there. I think the most recent one was in 1999. But there are papers out there that state things to the contrary, that you can be consistent, but I think that has more to do with human error across the board. And again, we don't know the metrics on how many people can capitalize on that while doing other things that have not been documented. Therefore, we don't really know what the catalyst is, so to speak. Anyway, getting yourself in position to win. So I would definitely write that down. If there was a list of things that you had to do, for me, that would be one of them. All you gotta do is get in position to win. This is not trading this to the upside, to me, is not being in position to win. I don't care what news comes out, what data, whatever, especially not on a Monday. I'm not telling you not to trade to the upside. I'm telling you to get more information. All right. Why did that? There's double. Okay, great. Let's lock that back in place. You guys might remember that this is how I start off pretty much all of my analysis for the week. And then from there, I usually we'll breeze through the rest of it, because we're going to do this. Well, I'm going to do something similar for each one, but sometimes it's just very easy. SPY is just not something that's very easy, which is why I continue to do this every day. Stay sharp. All right, now back into that 15-minute chart. I'm going to talk about this, or look at this from the intraday side, and talk about what the ideas could be for both sides, I guess. So the market gapped up. Whenever there's a gap up in any way, especially like this, from this very strange algorithmic falling wedge breakout, I pretty much know I'm going to cut this off from my analysis for the most part. Okay, we could use the whole week, but this I don't like. So I'm going to use just this for right now. Going into next week, obviously up here, if price does not break any of this, then trading to the upside is a no-go for me. Period. That simple. Unless, of course, price were to break down first, and that is where the intraday trade ideas for me come from. So here's how they typically look. If price were to break down, let's talk about the first idea. This is an upside trade. Here are the conditions, right? It would have to be, for me, a reversal. So a reversal from significant lows. What do those look like? All you gotta do is see what we did up here in this range. What can I identify that shows up repeatedly? To me, that has to actually be a reversal from something significant. Where has price broken out from before? This range is alright. It's cool. It's fine. Like, there's risk taking this here, but we've seen bounces from here, and we've seen them from here as well. If I were to take a box and draw it straight across, we would see that. Knowing that there's risk, my ideal scenario would be I start to see something forming in this area, in this range, and I set bids for my options contracts, my call options, somewhere where, you know, price would need to break down a little bit further. That's the dream. So I'm not going to set a particular price, but let's see if we can find a mental pivot. 582.37. I'm going to set that as 582.50. Because again, we're talking a range, and let's make sure we mark it here. So recent support, potential reversal area. Once again, you will notice I'm not, it's a range. It's a decent spot. It's a nice heads up, but it's also reminding me I still need to be observant in that moment, make sure I make my decisions based on what I can see at the time. okay, and what my risk is and whatever else. Like, I'm sure most of you guys know that. Also, I noticed that this happens to be an area of, I won't call it significant volume, but there was enough here. I'm going to drag this over just so I can have a look. What do you know? When we bring this over to include this day, the 16th, look how much volume actually traded in this spot. No surprise there. That's great. That is called confluence. Notice how I made that decision prior to getting this information, though. It's very important that you take a less biased approach, and if you can get some additional confluence there to confirm, that's great. All right, so I like this area, and in fact, so much so I'm going to embolden that line, and I will review this, or I will reiterate this at the end. But so that's that area. That's the only way I would trade that to the upside for the most part. In terms of conditions where I say this trade is broken down and it's a no-go for me, well, there's other factors to consider, of course, whether there's data coming out, or maybe I'm watching the price action, I don't like how it trades, it's trading funny, or maybe market gaps down. That changes the conditions, but you should be able to apply the same kind of logic no matter what's thrown your way. So now the downside trade, that's pretty simple. That's a pretty easy one, right? That would be price breaking out in some way where I feel it doesn't have the steam, and I can get a really solid short. But this is dangerous for a lot of reasons, because when the market is near these all-time highs, you don't really have very many spots above that you could point to and say there was at least some proof, or there has at least been some major volume at that spot. So if price were to hit that as a ceiling, let's say it breaks out and it goes against me and I'm short, I can at least point to that spot and say, there's a place I can make my decision, right? You don't have that. So I'd be careful. But that said, this little area here, let's say, price hangs around here for a little bit and then breaks out and makes a new high above this pivot, but doesn't quite hit the all-time high. And sometimes how price is kind of subtle about that, right? It won't quite touch it. It'll be so close. That's one way, a dangerous way to do it. The other way is to pay attention to if price starts having difficulty clearing one of these lower pivots, aka a lower high. That I'd probably write down. It's a good strategy for setting up your own trades. Is paying attention to, hey, I have this, I know this would be the spot, but if you can't even clear, but let's say I were to draw a line here, right? Let's just do that. Let's say price is trying to break out and it's struggling with this, right? Consistently. And then it gets a very faint move above, but starts failing to clear even these candles. Maybe then, you feel a little safer with the probability there. But if it breaks out and it clears both of these, and this is the last line of defense you have, yeah, that's a bad idea. Are you guys following me so far? I know those of you guys who've been around for a while, I know you're like, yeah, pretty much got this, buddy. But this, again, this is nuance. There are very small details here that I use. I don't know that others always do, so that's the only reason I'm making sure I walk you through this process so you can understand how I think about it. So actually, we don't need this here at all. I try to keep my charts clear if I don't need it. So that's how you approach something that is a toss-up, right? You have to let it make the first move. Actually, that's a good one. The thing that I always say is let someone else go first. If you can get rid of the FOMO, as they say, and let the market make its move first, a lot of the times, and let it play into your conditions, you'll probably be a lot better off. I mean, that's the smart way of doing it. Don't just close your eyes, cross your fingers, and the plan you had from the night before, think that that's going to work out. It doesn't make any sense. Okay, next. What was the other thing I said before this one? It was pay attention to what we call the less impressive pivots. That is kind of catchy. Pay attention to the less impressive pivots, right? They give you a little bit of heads up. And the thing I said before about price breaking out, what was it? It was something. What did I say about the party? Oh, beware the lame parties, dude. Yeah. So when there is a breakout, or price has cleared this pivot, for instance, but then price starts to fizzle out here, I'm super careful of those things. I don't care if it makes a new high, from the pre-market or whatever. One strategy though that you can apply is, a lot of people do this, I know, or at least I know some people within the community that do this. When price fails to break the pre-market high, they don't take that trade. They wait for the break of the pre-market high, and then a pullback before even considering trading to the upside. Little things like that aren't bad. I actually like that one, especially those that are trading, pretty early in the day. So pre-market high clearance. All right. There you go. So that is how, again, I would approach Mondays, wait and see days, or days where there's data being announced, days where you're near the all-time highs, days where there's increased volatility. And I know most people don't really know what increased volatility means, but if you go look at your options contracts and you pay attention to what it has typically been trading, or what it looks like on average, and then see which options you're looking to trade, pay attention to what the IV is, that'll help you within versus the market. Of course, there are tools for all this stuff, which will make things a lot easier. But yeah, that's pretty simple. I'm pretty sure you guys get this stuff. Okay, on to the next thing. Now we can start talking about some simpler or some easier trades. As a matter of fact, if let's say I were to take this trade as a bounce trade, right? From, I don't know, we'll call it support. And I start to go long here at this spot. I'm pretty sure you can figure out what areas you need to pay attention to as maybe potential closing spots, right? Just ahead of time, right? I can tell you what I'm looking for before the day even begins. If I were to take this trade from here, I would look for where price has spent the most time, because that's where the most orders were filled most recently. Is all I have to go on. If there's a significant area maybe tomorrow prior to me taking the trade, sure. But obviously this is it. So it would be obviously from the 582.50 area to 584.50. Essentially. Like once that happens, anything that happens after that, if it makes it back there, well, that's on you, buddy. Because your risk changes significantly, right? Like the odds change significantly at that point. All right. On to the next thing. And same thing for the downside trade, right? If price breaks out up here and there hasn't been much happening here, and you get lucky and the candle breaks down, same thing. Don't be surprised if your short trade gets cut short because price finds the stamina or the strength to bounce back from here. Just know when things are starting to get dangerous. Don't hold the trade all day. That's probably one of the biggest or most frequently asked questions that I've gotten over the last 4 years, which is, how long do I hold the trade for? And instead of, I don't want to give you the asshole answer of when you feel like you shouldn't hold the trade anymore. That is hopefully an actual helpful technical answer or some insight into how I look at it. All right, let's move on to the other names. Watch list. Oh, no, we don't need to do that. We need to, actually do add this to the sidebar. Pick a name. I'll let you guys decide while I drink my water. I'm about to move fast. I'm telling you that right now. So pick a name, any name. It doesn't even have to be right here on this board, but just in case I'm missing something cool happening out there. For me personally, I would say if you have names or you have trades that you know typically stay focused on, that's not a bad thing to pay attention to, but I don't think you have to stay trading that name in particular. If anything, you can keep an eye on it, but also pay attention to your performance. You know, your trade journal, so to speak, will tell you how you're performing at things or how you're responding to the market at the time. Something else that you want to do, of course, which a lot of people don't, is make sure you go into your economic calendar at the top of the day, right? And excuse me, not just at the top of the day, but pay attention to what's happening on the day. You'd be surprised how many traders only pay attention to when, you know, the Fed is speaking. As the people I think within our community know, there's a lot of things that can happen that start driving volatility up. So there's a lot. The Lions have started at least 5-1 in consecutive seasons for the first time since relocating to Detroit. Wow, that's a stat. Yeesh. All right, let's pull up the data real fast. Let's get a vote. How many of you guys are following along very easily? Just out of curiosity. It's okay if you're not. I'm not keeping track of this answer. The Qs, I will look at the Qs. In the future, I probably won't do too many indexes back to back because the way that these trade, as you have noticed, when the market's got a bunch of different things going on, one sometimes balances out the other. But yeah, I was kidding about not keeping track. I want to know if you guys are able to follow along, because if you're not, that means that I'm going to change some of the approach for these. But for like for prep, I mean, this is for me personally, you know, so I'm not necessarily teaching, but if there are questions, make sure you feel free to ask them. Sweet. And by the way, I'm not looking at any particular platform. Of the ones I'm streaming on, I have a dashboard that shows me where else are we on. YouTube? That's what it is. Right now it's YouTube, X, and Telegram, but in the future also, I think we said Twitch, TikTok, Instagram, Facebook Live, and a lot of other ones all at once. But the most immediate stream will come from the website, obviously. Following along, sweet. Okay. What do we got? Oh, this is gonna be an easy one. That's super easy. If you take everything I just said about SPY, I mean, you can look at this. It applies, except for there's no real pattern outside of it, right? It's near its high, its all-time highs. It hasn't quite, or it's pretty close. It's had a few days where it's gotten close, but not quite, like here and here. So before deciding to trade here, I want to see it clear these areas, or maybe here, depending on how short of a trade you're taking, right? And if going short, I would make sure that I don't try to short the rejections from this spot. I would wait until I can see how it's reacting here. Or maybe sometimes the real sneaky way that you'll notice this is it'll get rejected from, let's say, this spot, right? So it won't be quite the all-time high, but it'll be just enough, and it'll sit there, and you'll see the volume increase and everything. Sometimes even in, form of a bull flag or whatever. You guys have seen me do that quite a few times, I think. And it'll be the fact that there's some information I'm gathering that isn't so quote unquote obvious, right? It'll be something that, like this again, it'll be the high of a day prior, or some other zone. And if I take the volume, obviously that'll help me out with framing this a little bit, but because we can't go back to July and use the volume from that doesn't make any sense. So let's come over here and use what we got, October 1st. I like it. So a lot has traded here, and that should be expected. You don't even have very much here, which tells me that we got to go into the chart a little bit closer. So what we got, 65-minute chart. I'm going to zoom out. And even just the character, like how it looks, it's trading a little bit differently over the last couple of days. But let's try and pick something. Let's try last week altogether. So yeah, 14, yeah. Same thing, right? I guess sitting between two spots, almost identical in volume, and it's right there in the middle. For me, I would save myself the time and determination of what I think is going to happen and let it choose a side first, unless I'm writing options, right? And I'm collecting premium on both sides, but that's very dangerous to do starting that week off, because again, you don't have anything to go on really. If you want to know what data is coming out, or what Fed or macro events are happening tomorrow, 10 a.m. indicators, or economic indicators, the leading indicators. Let's see. Lori Logan speaks at 8:55. Kansas City Fed president at 5 p.m. So that's after market close. So relatively quiet day. And Mary Daly speaks at 6:40 p.m. But again, market close. On Tuesday at 10 a.m., Patrick Harker speaks. Once again, that's not what I would consider to be very busy. And then Thursday, you know how Thursdays are. Thursday, there's a whole lot to say. Apparently, there's a lot going on. Durable goods on Friday. So actually a relatively quiet week, I think. That doesn't mean much, but the same thing applies. Like I said, I would wait till the market leans to one side or the other before I start making determinations. But I would try to pick up some clues on the way, whichever direction it's going, right? Whether it's, approaching highs, and I want to pay attention to how the price action moves with, let's call, we'll say these lower highs, or if it's starting to break down. I might see some patterns forming or whatever, but I'll pay attention to the fact that this has been, if you want to call it support, this is here. You've seen me take trades where I trade the reversal because, one, the market is rebounding constantly, even if it's not going anywhere. Volume's building somewhere within this range, and the market is so fixated on it's finally breaking down, right? Like the end is finally near, that kind of thing. Sometimes there's opportunities there, but there's also times where the breakdown that's happening, no matter how much it seemed like it should, there's usually a series of prices where those candles to the upside are massive, and I just refuse to trade short in that kind of volatility. That's sometimes that will create opportunities to trade to the upside. So yeah, a little bit tougher, but anything near all-time highs requires that kind of consideration, I think, and that patience. I'll come back to it after tomorrow, but definitely a Monday analysis type thing. Netflix, Apple, Nvidia. Netflix just had earnings. I'm not even gonna look at those options contracts or that chart. But then I go look at Nvidia. That's hilarious and ironic. Oh, this is great. Let's go look at Netflix first, though. I'm just curious. I'm gonna do one or the other. Oh, buddy, yeah. This is called stay the hell away. That's one of my favorite patterns. You guys ever traded the stay the hell away pattern, and then you lose because you know you didn't stay the hell away? It's pretty common amongst retail traders. Why do we say stay the hell away? Because if we go and look at an options chain, I can't wait to be able to pull up versus the market when I do that. But for the time being, we will pull up the chain from our good friends at Barchart. Can I get this ad off of my screen, bro? What are you doing, dog? Bruh. They like won't let me click it. They want me to open this ad. I'm not gonna. Feedback on this ad. Stop showing it. Whatever. Close the ad. Don't care. Won't let me do it. All right, refresh. Okay. So we'll pull up Netflix real fast. Netflix historic volatility 36.43. Let's pull in what we've got this upcoming week. Sure. Near the money, let's say actually do 20 strikes, volume graph. Okay. Historic volatility 36.43. What is the IV for? What price is it at? 766. Okay, so for out of the money options, somewhere within here. So slightly lower. So the pricing in the options is actually, I mean, it's tough to say historic volatility is the primary indicator here because it isn't. But if we were to go, well, we'll look at calls here and then put options. There we go. This is more what I was getting at. So not only is the open interest not very large at all, actually, or wasn't. Look how much traded. That's crazy. The volume for these is absolutely crazy. So lots of gambling going on is what I'm saying. That said, lower IV is also not necessarily a great thing. But it's not that bad. It's better than I thought it would be coming in here. So when you trade directionally and that's built into the options contract, you got to be careful. The best way to do it is to see what we have. Okay, so we said what, 766.50. Okay, so now it's sitting at all-time highs. What does our volume and open interest look like? 800s. Oof. Yeah, see, that's such a wide range. Let's actually look at the Greeks themselves. Yeah. Stop advertising to me, bar chart. Okay. Oh yeah, look at that price fluctuation. Look at what it was about a month ago. Okay, let's look at the 1 month chart, 5-day chart. So a few days ago, a couple of days ago, wow, yeah, that's lost a lot of value. That's moving considerably. Where the hell is that money coming? Like I'm trying to understand where. Built to the Greeks. I just want to know where that pricing is coming from or what's built into it. I definitely don't want to jump off course here, but 765 call options. What is this for? This upcoming Friday. All right. Yeah, I can pretty much guarantee you this. Once the day begins, this is going to look a lot different, including the IV. So I'd be careful of that on a Monday. But all right, well, we got 765. Let's say 770. Okay. 1018. Was the last trade. Great. Volume over open interest. So yeah, these are just trading a lot. Open interest 531. Vega. Across the board, they're actually not that bad. They're actually not. There's just a lot of them. Liquidity problems, maybe. But what ends up happening is that usually a large directional move is priced in, and then the market will trade in a lackluster form, and then doesn't. You don't see that at all, right? You don't see the market make a significant move, and so your options pretty much just decay. That is what happens very often after this. You know what that's called? It's IV crush. Okay, yeah, so that's god awful. But if this is the easiest chart of them all, it will be the easiest one, because all you have to do is, for an intraday trade, depending on where you want to trade it, guess what? You are SOL when it comes to figuring out what's above this right now. If you're quote unquote bullish, if you want to trade this to the upside, you got two options. You can trade based on mental pivots, which again, there's not much science behind that. My little tricks with mental pivots are specifically for SPY. They can work with some others, but again, not what I would recommend. It's very situational. Secondly, of course, you can do something along the lines of, I'll leave the jokes alone today, but you already know how I feel about Fibonacci levels. You can take one of these. Yeah, this is crazy. That is a crazy level. No way. But we'll do it anyway. Go here, and we have our red candle here. And then from there, you would just, and I don't even like where that placement is because of the size of the candles. Yikes. Same thing goes with the log chart. So maybe I'll start from the consolidation. Let's go here. There we go. It's a little better. A little closer. So you would take your fib levels here, and then from the next spot. And I mean, again, I'm choosing this only because it did not line up very well here. These are huge moves. To me, from a visual standpoint, it's not reliable data. It's not reliable information, if you consider fibs reliable at all. And 1, 2, 3, there we go. So fib extension levels, these would be your spots, which 1.68 fib. You could just say 770 mental pivot. That would be the target if you want to go out on a limb here. Maybe wait for some kind of pullback, maybe a break above whatever the pre-market high will end up being, and then a pullback, and then your target is 770 or 769.50. So you're not the last one, in the last one without a chair. That would probably be how I would approach it. As far as trading to the downside, I mean, you got a ton of stuff here. But as far as volume goes, you would just need to go into. Let's actually just pick one. Let's go yesterday. Yeah. Funny how the fibs somewhat align with where the volume is traded. Not great, but I bet you'll also notice something else. 759.29 is kind of close to 760, which would be a mental pivot. See why I would say that this is more reliable than these lines are, but that's how I would approach it. If I'm trading short, all I gotta do is just see how the price action looks. There is nothing from a charting standpoint that tells me it's going to trade in any way, shape, or form. It just came from, just had earnings, right? So there's nothing technical analysis can help you with here. Some might disagree, but that's fine. Let's compare win rates. I'm just kidding. Just get extremely competitive out of nowhere. All right, what we said, Nvidia. Nvidia is a dangerous one, but I know this is everyone's favorite stock to gamble, right, or chart to gamble from right now. So 15-minute chart. Oh, this is actually pretty good. This is great. You're going to notice a similar theme across these because they're all, any of the Mag 7 names right now, or most of them, you're going to get that same process, which is as price has been sort of consolidating here in the last, couple days, or the last couple of days of last week, you'll notice price sat right in the center. You did not have any breaks on the way. You did not have any, I think the market was expecting something a lot larger, especially by talking about how much Netflix was going to impact the rest of the market. And what ended up happening was things traded mostly flat. As far as patterns go, though, if you just want to make some stuff up, by all means, we could do that. I could go here and do one of those and take one of these and do one of those. And I'm not trying to be cynical, guys, but I'm just saying, been doing this for a long time. So I know what's impactful and what has the capacity for, being impactful, and what doesn't. What's mostly noise or conjecture. So again, you didn't need to draw anything for this. We know that price has started to compress. That's once again what we saw on Friday. From here though, if there were a breakout, what are your targets? Again, pre-market high, recent aka local high. And you notice how the same thing applies, the same formula. I must have done this thousands and thousands. I mean, I don't even know how many times, but thousands and thousands and thousands of times. This is why it's like the back of my hand, except for I know this better than the back of my hand. I guarantee it. Let's go into a smaller time frame, 15-minute chart. Same thing. Price has been consolidating. If we go look at a trading textbook, and let's say we were to throw all semblance of price action out, the window, and base this only on the chart patterns themselves, that would be absurd. But let's pretend for a second. I'm going to take this. I'm going to draw the compression of the chart. The reason you don't see indicators on my charts for the most part, outside of volume, is because all of it comes down to this. It just so happens that volume itself does all of this better than this does. All right, I don't need to draw lines to see trends, but I'm also not bashing anyone for doing it. There's nothing wrong with it, and shouldn't be ashamed of using it. You shouldn't try to stop using it, especially if it's worked for you. Don't rely on it, but especially when it comes to drawing patterns or whatever else, it's just fine. Just know why you're doing it. Okay, so here, price has been compressing in either an up or a down move. I'm willing to bet the market gives you something to work with a little bit later. But if I had to pinpoint, or if I had to make a, let's say a strong observation on what I'm basing this on, even though it's traded here for some time, I would go intraday tomorrow and see if this continues. Because if it doesn't, and let's say there's more volume trading underneath, for instance, or there's more volume, let's say there's stronger rejections from somewhere that's not quite the pre-market high. Well, I'm going to think on that and say, well, this is maybe an opportunity to target somewhere short. I'll look at whatever's intraday, and then I'll start to pay attention to what those areas look like. However, if price is starting to, let's say it follows that track and it ends up in this gap here, and I notice that every time it moves into that gap and it starts to bounce out of it, then I'm going to start thinking, well, on a larger time frame, it is setting up to potentially have this continuation, right? Maybe it's going to, maybe it can travel back through that series of volume that we've seen here, and I'll just go and narrow down the amount of information I'm taking, right? But this is the area where price is using as a magnet. That simple. You guys following? I'm actually going to keep an eye on this. And what I would do is I just, I'll set a little alert for one of these, right? Pre-market high from Friday. It might be the first spot I pay attention to and set some kind of notification for myself to pay attention. Extend right, lock figure. Yeah, let's do it like that. And then I'll just right click it. Create an alert at this line. Sensitivity, price will fire off within 10 cents. Alert name, NVIDIA. I'm not gonna put a note here. Expiration, 5 days, whatever. Triggered twice. Fire during market hours. And let's make this a touch instead of a breakthrough. There you go. Set your alerts and you're good. So the 139. So what I would do is I don't think I would use 139 as a yeah, as a mental pivot for me, that would be like 140, 135, 137.50. You know, in between those, if I absolutely had to, but especially whatever I see around here, right? The reason I wouldn't use a mental pivot is because I mean we have an actual pivot here, which is 139.15. So I would just mark it, and outside of that, I would just go a little bit further left, and I would make sure there is no area that I'm missing. And over here, yeah, you don't really have much. So I would just use the specifics. I try to only use the mental pivots if there is no other information for me to go on, really, you know. But it's just pre-market high. I mean, I'm not even basing it on anything other than that, to be honest. It's just what I can see visually. That's where that price came from. Yep, pre-market high. And same thing, you could do the high of the day before, which is, I mean, instead of 140, it would be 140.25. Even though it's not the high of day, it is the high for this little area that's right here, right? Because this candle is, within the first 15 minutes, and you can see how much volatility, came with that. So that price, in my opinion, will be considered unreliable. It's the all-time high. And it's also the pre-market high that's over here, right? You could say that these two even line up. So there's 140.30 and 140.25. I like these better than just this one outlier. So, one of these two would probably be it's not a bad pivot, but safer. Pre-market high. It doesn't mean I would go long on that break. It's situational, but it does mean that I have two spots to look out for when I'm trying to make this decision. That's all we're doing, is giving ourselves only the information we need. Okay, so that's what we got for NVIDIA. And of course, oh man, this is completely different from what we've seen. This is a super easy one. I don't even have to draw anything for this. It's very simple. Depending on what happens in the pre-market session, you want to see if price is going to reverse from here, right? Super, super easy. And what do you see forming or taking shape here? There's a pattern that some people might see. It just won't be on the 15-minute chart, but I bet on the 65-minute chart we could probably find something similar. Clone. Some people would say, well, the head is lower than the whatever, dude. That doesn't matter. Okay, it does not matter. The point is, there's three spots I can point to where price has reversed, or at least started to there at the end of Friday. But there's a few spots I can see, and a lot of volume has traded here over the last however long that is. Let's bring this something more relevant. And this was also a spot where it broke out in the past, but that's just me doing too much. There you go. How do I make this determination? Well, you can't really. There's no confidence really to be had. There's probably a mental pivot here somewhere. Let's call it 575. What's the low here? 574.03. So actually, if it loses, let's say 575 or 574.50, maybe I would throw this idea away. But this is worthy of keeping on watch, in my opinion. I don't know why this line is here. But yeah, I'm going to add. You know what? Let's do it this way. I'm just going to jot these down. We'll add. So I did SPY. Notice how I'm discovering these opportunities organically. I'm just coasting through them, Just chill. What was the other one? I don't think I liked that NVIDIA chart. Yeah, it was alright. We'll keep it. Let's get rid of that. Get rid of that. Take NVIDIA there. Even if I don't post it or share it. Tesla. Oh no. Hell no. Nope. Trading sideways like that. I don't think anything. I don't have an opinion on the direction of price. I just don't like how it looks. Simple as that. Microsoft, I don't like to trade. We'll skip it. AMD, I do not like this. You'll almost never see me trade anything that looks like this. That little fade throughout the day, breakout or gap up and fade, and then gap up and fade. Hate it. Don't like it. Stay away from it. Google's chart, I mean, I don't like trading this either. I also do not like how it looks. I don't like how most of the stuff looks. Amazon's a different story. This ain't so bad. What do we got? 65 minutes, 15-minute chart. Oh yeah, this is same thing. You'll notice a lot of volume in one spot is the same formula. A lot of volume in one spot, caught between its highs and its lows. Yeah. So what's the approach? Wait till it gives you some information. Although I'm gonna mark down Amazon and pay attention to, because it was supposed to be on my list in the past few weeks. And then I'll go and I'll refine my ideas a little bit, and I'll see what happens in the pre-market. I'll see what happens in the futures market, especially, and kind of go from there. Apple, you already know my policy on trading Apple. Apple is garbage. I will never trade, ever trade that godforsaken stock or its options. Okay. That's like a 7-8 year vendetta I have with Apple. So Apple products, I'll use them. I'll purchase them. I will absolutely not trade that garbage. There we go. So that's what I would do going into Monday, which is you need to have a little caution there. If you want to find or use actual trade setups, like you can trade patterns, right? That's the easy stuff. Going and identifying patterns, like you can even, come on man, look how much. I'm just gonna click whatever's in my list here. Same thing, same formula. Are you noticing that? It's the same thing that happened on Friday. When I start to notice this across the board, that tells me something. It tells me be patient, get some more information. That simple. Maybe it happens at the open, right? Maybe that information shows up later within the week. Who knows? But forcing trades is a horrible idea, as I'm sure you know. I'm not here to lecture you today, though. That's the other guy. Just as a reminder, last year in November, I traded 20. Wait, was it 20 days or was it 18 days I traded? No, I traded 20. I went 20 for 20 in November of last year. That's not to say that I'm going to do that again, though. The point I'm making, though, is that stretches like that only come from waiting for your opportunities, that the things that work for you and how you go about it. And then you're going to have times where you're not trading as much at all. But the reality is, I've never seen someone be profitable, or I've never seen someone be more profitable by doing too much. That simple. Any questions, comments, thoughts, concerns, things that you think we should know, or things that you want to bring up and or say? Any complaints you want to make? Anyone want to have a roast session, a rap battle? Anyone want to pray together? I mean, the floor is yours now. Only like 2 people know that I was not joking about any of that. Oh man, the emails are coming in. Crazy. Nice little warm up. You know that I will be, or some of you have heard that I will be transitioning back into streaming on a daily basis. So most of that will not be on x.com, except for within like the community that's on there, because it seems like people like to use that. But anyway, we'll see. We'll see how it goes, right? However, there's some pretty dope surprises on the way. Like, there are some crazy things on the way. I don't get too excited, but you can. You should get very excited. And I know you guys have seen screenshots and whatever else, But yeah, we're doing it. No, what are you talking about? I can't rap, guys. You guys are great. You guys are awesome. Fantastic. Versus the market and everything that it has to offer is going to blow your minds. We start to put all these things together. I'm having a hard time seeing how anyone can really compete. Not only is it going to make your lives simpler, especially when it comes to trading intraday in real time, but how you prepare, just from a mental level, it's gonna be bananas. So as always, I'm extremely grateful for you guys in here and you guys out there. If you have questions, feel free to shoot me a DM. Wait. Actually, yeah, you know what? That's fine. I forgot about the DM mess that we have going on. But if you have questions, you want to know more about what's going on, feel free, shoot me a message. As you can see, I am very thorough with my approach, and you may notice this compared to how things used to be, but I am a lot more focused in my approach when it comes to this stuff, because I'm more experienced now, even when it comes to teaching and being able to convey ideas and knowing what kind of issues people run into. And you'll see that soon. You'll see what we got. You'll see what we got cracking very, very soon. Now it's time to go on Versus the Market real fast. I gotta see something. Yeah, no, it's gonna be crazy. They don't listen. They're not ready. They're not prepared. Oh, there we go. Yeah. So I'm trying to think, did I post this or did I share this information with you guys yet or what? No, I'll tell you guys. So in Versus the Market, the reason I left the vault here up was because once I got all of the streaming set up the way that I wanted it to here, I wanted to make sure that I had, a plan, or I was able to commit to doing it. But what you're going to notice over the next 6 months is at least a few hundred hours of content being uploaded to the already extensive vault, and all new stuff. I don't mean uploading old stuff. I mean everything that I'm streaming and recording, especially with this new approach and these new tools. You're gonna see a lot of that flood into here. And yeah, that's all I can say without giving away too much. But the reason this is important is because I told you, take an hour a day, like set aside an hour a day if you can, and see what kind of change you can make over this season, right? These upcoming few months. It will change your life. I've done it. Granted, I did it out of spite because, it motivates me, man. Okay. Someone said I couldn't do it. I said, okay, watch me. And that's kind of how that happened. And that's not the whole story, but that's a big part of it. For you guys though, it'll make a big difference. And I'm telling you right now, after this upcoming year, I won't be doing it like this again. So it's the only opportunity. That's if you're into that. So set aside a time, or set aside an hour if you can. And there will be content there, but there will also be structure. I don't want to tell you too much, but there will be structure to help you know how to use that information. Also, you don't have to watch all 500 hours of content. That's not the goal, okay? But there are so many different trade situations and scenarios that, I want to cover as much of it as I can. And don't forget, again, that's what this search functionality is for, right? That's the whole reason this exists. So it's not going to populate while I'm in this stream. I forgot about that. Or at least that function won't populate. Let me try. Oh yeah, so maybe it was too many results. I see now. Yeah, there we go, pal. So you know what I mean? Like that's the whole point here. And you can use more than one word. You can narrow down what it is, right? I want to look at call options, well, that doesn't narrow it down very much, right? But options short, there you go. See, you can play around with this to get information that is suited to you, not to mention the transcripts and everything else that you can find in each video. So just don't overwhelm yourself early on. I know how some people are. They'll hear 500 hours. Oh my God, I can't trade. It's too much information. Like, don't do it. Like, do not psych yourself out. It's not that big of a deal. You can learn the basics, and if you do the basics very, very, very well, which is all I discussed today. I didn't discuss anything advanced. You do the basics very well. You cover your bases. You will be just fine. But then again, I have a system. I have a great. I don't even want to tell you. I don't even want to tell you, man. You'll see. Yep. So I'll be streaming soon, and I know you guys saw the screenshots and whatever. I'm not posting that stuff just to piss you guys off or to as a tease. It really is something that will be available like very, very soon. So if you want to be able to access that early, I don't think we have that option. I don't know where Bree is at, but when she gets back, I'll ask, because they gave, didn't we create like a, I'll wait until I stop streaming. Yeah, but yeah, let's make it happen. I'm getting the hell out of here. Peace. Versus the Market will be available very soon. If you are on the waiting list, please do not fill out that form a second time. Thank you. It will not push you to the top of the list. It will just irritate my assistant, I think. For everybody else, stay sharp, stay smart, and for those that want to join the community, you might have that opportunity within Versus the Market. For everybody else that's in the community that want to join Versus the Market because you keep hearing about it, no, I'm not intentionally leaving you off of the list. Someone asked me that. I'm just going to address that right now. No one has time to play petty games, okay? Most likely we just got swamped before I started hiring people, and now that we have staff, we're working through the backlog. So yeah, cool. Enjoy your evening. I will catch you guys later.